Conventional wisdom is that owning is better than renting from a net worth perspective. But is that difference actually worth it? In this video, I'll be using my financial planning software to model the changes to net worth that occur when someone rents and invests the difference versus buying a home and investing what's left over. And the one thing that can dramatically change the outcome. Let's get into it. For now, let's assume you keep renting. You've got a nice place that you're renting for $2,000 a month. We'll assume rent increases 3% a year. This means you're paying a little over $275K in rent over the decade. That's not wasted money because you had somewhere to live. But from a balance sheet standpoint, you got a negative 100% return on your $275,000. That's the baseline. Now let's look at the cash flow. For cash flows, we'll say this person spends $4,000 a month in addition to the housing expense, and they invest the rest in a 401k and taxable account through retirement. Now let's look at their net worth over time. This chart shows us net worth in today's dollars. As you can see, they would max out their net worth at almost $3.1 million at age 66, since this plan has the person retiring at 67 and starting to draw down on their investment accounts. Now let's compare this to buying the way most people think about buying a home. Let's assume a $500,000 purchase price with 5% down plus closing costs. We'll use a 4% appreciation assumption, which is in line with the 3 to 5% annual average over the long term. And here's what changes. Looking at the cash flow, the first thing we see is that in the year after purchasing the home, this person would have about $13,000 less to save and invest. Now, before you say, all right, it's settled then, I'm renting, this doesn't tell the whole story, because part of your mortgage is going towards paying down the loan, and you have an asset that tends to appreciate over time. Now we're going to look at how this affects net worth. By buying a home, this person could be looking at an increase in net worth of $650,000 at the start of retirement and $1.5 million more in ending net worth compared to renting. Now, obviously the equity in your primary residence isn't money you can use for other things, but there's nothing stopping you from downsizing in retirement and having a nice stack of cash to invest, or as in this scenario, paying off the mortgage over 30 years and drastically lowering your monthly living expenses. Now, before anyone says homes don't always increase in value, that's correct. So let's stress test it. We're gonna assume appreciation on the $500,000 home is 0% forever, but property taxes and living expenses still increase over time with inflation. Looking at this scenario, this person would still have $451,000 more at the end of life compared to renting. Now, owning isn't smooth. You'll still have to pay for maintenance expenses, but even with your monthly living expenses being higher, when owning and with 0% appreciation, over the long run, owning can lead to a higher net worth. So here's where the comparison usually stops. Most people look at renting versus buying a home and assume those are the only two paths. But there's another way to structure this that can really supercharge your wealth building. Instead of buying a single family home, you buy a duplex. It might be a little more expensive depending on where you are, so instead of $500K, we'll say it costs $600,000. You live in one side and rent out the other unit for $2,000 a month. Financially, that shifts things in a pretty significant way. You're still getting appreciation on the full property, and you're still paying down principal on the full loan. But now part of your monthly housing cost is being offset by rental income. Let's look at the free cash flow in this situation. This person's free cash flow in the year after the purchase would still be about $4,200 less than if they just continued renting at $2,000 a month. But their cash flow increases by an additional $8,500 a year compared to buying a $500,000 single family home. And now looking at how it affects their net worth. Here's what renting versus buying a duplex looks like. An almost $3 million difference, and that's in today's dollars. And now I've got up on the screen what it looks like if that duplex never increases in value. Now, I don't know about you, but I wouldn't mind only having an extra $1.7 million. Of course, that doesn't mean it's easy. You have a tenant living next to you, and there's 2 kitchens, 2 AC units, and basically more of everything that can break. But even with these increased maintenance expenses, net worth increases at a much faster rate, providing for the flexibility to eventually move into a single family home, since most people probably don't want to live next to their tenants forever. Now, one more piece that almost never gets gets discussed in this comparison is what happens at the exit. After 30 years, the $500,000 home appreciating at 4% a year would be worth around $1.6 million. Now, based on today's tax laws, which will probably be adjusted upwards 30 years from now, you would be able to exclude $250,000 in gains if single or $500,000 in gains if married on the sale of the home. Now, if it's a duplex and you've lived in one unit, the personal use portion of the home would qualify for that same tax treatment, while the rental portion is handled like a rental property, where you can utilize a 1031 exchange to defer taxes. But the point isn't to get lost in tax mechanics. I already have enough of those videos that the YouTube algorithm doesn't seem to like. But the point is that owning gives you options. You could sell and take advantage of primary residence treatment, you could convert the property into a rental and keep it, or you could sell and go live in a retirement community in Boca Raton. Renting doesn't really change over time. And imagine what things would look like if instead of a duplex, you buy a triplex or a fourplex. Now instead of one person paying you rent, you'd have 2 or 3. So if you're renting because you've actually run these scenarios and you prefer the trade-offs, that's a rational decision. But if you're renting because it feels safer, you might want to look at the numbers again. Alright, if you want more of these videos where we just sit down and model things, hit the subscribe button. And if there's a specific scenario you're curious about, leave it in the comments and I'll look at it. Alright, thanks for watching and I'll see you in the next video.